Hello and welcome to this new edition of Bourdier's Monday Report. The release of US economic statistics is still somewhat disrupted by the federal government shutdown of previous weeks. For example, we received the retail sales figures, but this release was delayed and dates back to September. Nevertheless, it shows that consumption is slowing down and is only increasing by 0.2% month on month, much lower than the expected 0.4% rise. Unfortunately, as can be seen on the chart, the drop in consumer confidence measured by the Conference Board in November confirms the decline already observed in the index published by the University of Michigan. Therefore, it does not provide any reassurance regarding the short-term consumption trend. In fact, these disappointments on the economic front were actually rather well received by the financial markets. Indeed, investors are increasingly convinced that the US Fed will cut its rates this month, which will ultimately support the economic outlook. Thus, 10-year sovereign yields have fallen by a few basis points in both US dollars and euros, causing bond prices to rise by 0.4% in dollars and 0.1% in euros. Equities have benefited from this, rebounding by 3.7% in the United States and by 2.5% in both Europe and emerging markets. Swiss equities performed slightly less well, but still posted a satisfactory increase of 1.6%. Finally, the dollar index depreciated by 0.7%, which allowed for a gain of 3.3%. This week in the United States, we will have the release of the ISM Purchasing Managers Index for both the manufacturing and services sectors, as well as industrial production and PCE inflation. In the Eurozone, we will have the Consumer Price Index for the month of November, and in China, we are expecting the trade balance figures. Within equities, we are adding the company Merck & Co. to our portfolios. The American pharmaceutical company has an expanding pipeline of molecules thanks to acquisitions, and the quality of its balance sheet gives it the flexibility it needs. Therefore, the stock's discount no longer seems justified to us, and the company's revaluation should allow the share to outperform within its sector. That's all for today. Thank you for your attention, and see you next week.